BYD, Tesla, NIO, Xpeng, Lucid, you name it, all saw declines in their stock prices. Numerous of them have fallen. That is a slight setback. However, shrewd investors like Cathie Wood are making their purchases at this precise moment. Cathie Wood recently bought some Tesla stock, and today we will talk about why you should do it too. She has made the appropriate choices while buying and selling Tesla stock. She has lost a significant amount of cash as well as a significant portion of the tech stock she had purchased. However, Tesla has done well for the archive. One of Wall Street's most vocal proponents of Tesla has been Cathie Wood. In some exchange-traded funds managed by Wood, the stock has been at the top of the holdings list or very close to it. However, Wood continues to sell Tesla shares, or at least she did. She started doing so last fall when the stock was close to its high and did so once more this spring. She seemed to have made a wise choice in doing that. Everyone at the moment questioned why she did that, but it appears that she timed things very well because she is now repurchasing at a much cheaper price. Wood's trading has been on time, repurchasing shares when the clock sank and offloading some as it increased. Investors ought to take note of Wood's game purchases in October, which include an additional 66,200 shares for the ARK Innovation Exchange Traded Fund the day following Tesla's third quarter earnings report. Here are 3 compelling reasons why Wood is bullish on Tesla shares and why perhaps we all should too. Cathie Wood enjoys development, and Tesla is undoubtedly one of the greatest growth stories in human history. Just consider the business's expansion this year. The worldwide car market is severely declining. Well, Tesla isn't one of them. They're exact opposite. How is that possible? Wood's most recent purchase was done after the stock fell after Tesla's Q3 report, which defied logic, but it happens. Some analysts were concentrating on a management admission during the earnings call that they expect to fall short of the target of a 50% increase in vehicle deliveries from previous year. Notably, Tesla continues to forecast that it will achieve that objective for vehicle production. The disparity will be brought about by the company's ongoing shipment constraints. The main cause of the shipment backlogs right now is the fact that Tesla refuses to pay exorbitant freight cost. Therefore, they wait until the shipping cost to the destination where they are sending the autos is affordable. One of the things that investors appreciate about Tesla is that they are entirely focused on producing money. Due to such logistical difficulties, Tesla built 220 more vehicles in Q3 than it delivered. However, it is not truly a challenge. Rather, Tesla's methods are evolving. Instead of being driven by earnings calls, investors' notes, and other such things, it is starting to become more reasonable. The problem is that such buyers aren't merely interested in inventory, so whether customers acquire it during one quarter or another shouldn't affect long-term investors. Not only production, but everything is expanding quickly. In the third quarter, total revenue increased by 56% year over year, and net income more than doubled. In fact, Tesla generated more money than Toyota while selling third fewer vehicles. How Tesla's profit margins will fare the rivals flood the market is another worry for some investors. The problem is that they have flooded the market. The Chinese market is oversaturated, which is why the majority of Chinese manufacturers are selling at a loss to gain market share. Due to its extremely cheap production cost, Tesla is still able to operate in the market and generate enormous profits there. Tesla recently lowered its prices. All of the models they sell in China have their prices lowered in the past 12 hours, except for the Model S and the Model X, which are, of course, set to go on sale in China. Every single model of Model Y and every single model of Model 3 have had their prices lowered, which will be quite advantageous for Tesla. The main cause of this is that a significant portion of Tesla sales in China are now mostly made up of Model Y standard range, which is by far the company's most well-liked vehicle in that country. It is currently less than 299,990 RMB. It is therefore less than $39,500 threshold. As a result, buyers who purchase automobiles over 299,999 RMB that are not eligible for subsidies will suddenly be eligible for subsidies. In other words, consumer will not only receive the vehicle for a few $1,000s less, but these subsidies will further reduce its price. In addition, buyers receive a further $2,000 discount in a location like Shanghai. It means that a lot of individuals have access to a Tesla Model Y, which costs $35,000 in China. Sales will soar dramatically over the fourth quarter and the first quarter of the following year as a result. Now, we know that Tesla's automotive gross margins performed exceptionally well in the third quarter and remained constant at 27.9% compared to the previous quarter. That is hands down the best in the business. That suggests that Tesla is compensating for increased cost. On the other hand, Ford recently alerted investors that it anticipates an increase of $1 billion in supplier costs due to inflation in just Q3. Unfortunately for Tesla, Ford and other automated firms have been considerably more hit by all these increases in the cost of parts as a result of so-called inflation expenses than Tesla has been, since they are much more vertically integrated than Ford. Investors investors should regard Tesla's recent price increases in many of the markets where it sells cars as a positive sign that the price increases are boosting rather than sapping demand. For instance, take a look at how quickly prices are increasing in the US. It is astounding that neither demand nor prices have decreased, and we must admit that there is one important issue that isn't being discussed. Except for GM, Tesla's recently been at a $7,500 disadvantage in the US market. Suddenly that the situation has reversed and Tesla cars are now eligible for the subsidies, and the fact that many of their rivals currently won't provide them a significant advantage over the next 6 to 12 months in American market. Contributions from other items in particular. Some Tesla detractors draw attention to the company's constrained product portfolio, which hasn't changed in years. However, deliveries to PepsiCo using the electric semi-truck starts on December 1. According to Elon Musk, the Cybertruck is essentially set to go into production and delivery should start the following year. Tesla currently has more than 1.5 million pre-orders. If only 20% of them were fulfilled, 300,000 vehicles would be available soon, Tesla has declared. Currently, Tesla is developing an electric vehicle platform that will be 50% less expensive than the platforms for the Model 3 and the Model Y. Tesla intends to produce more of that specific automobile at the price point. Whatever you want to name it, the Model A or Model 2 cost $25,000. They intend to produce twice as many of those as all of the other vehicles they now have together. Musk assured investors that this company is accelerating efforts to improve battery output. Battery, storage, and solar roofing are also a part of its energy segment, and there's a greater demand than supply. As its energy storage deployments increased by 62% year over year until they proved their point, sales from that business accounted for 5% of overall revenue in Q3. They anticipate a significant increase in their energy storage. They are increasing production there because they believe that the market for energy storage will grow much more quickly than the uptake of electric vehicles. All of those should lead to many years of growth for Tesla from previous sources. Of course, they are also focusing on automation and robotics. Not to mention, we shouldn't ignore that. Because the worldwide momentum toward the shift to electric vehicles, Musk claimed that Tesla's company is recession resistant and that this trend will continue. While gasoline-powered products account for 95% or more of their product portfolios, the manufacturers who are currently losing sales should be worried about themselves. Before we dive deeper, please give a thumbs up if you're enjoying this video so far. Plus, stay tuned until the very end to find out why Cathie Wood bought Tesla stocks. In her finances, Cathie Wood frequently buys and sells. That is accurate, but individual investors should consider the company's long-term prospects. In 2030, where will they be? Will they market between 10 and 20 million cars? Will it still be the greatest automakers in 2030? Will they have additional services and goods from which they may generate billions of dollars? I'm certain that they will. Tesla is in a good situation. Its debt is little, which is a mere $2 billion, and it has a bank account with more than $22 billion in cash. In other words, it currently has 10 times more cash than debt. Tesla is currently valued high. The ratio of its price to earnings is 60. Ford and General Motors are competitors. They are at 5 or 6. However, in reality, those businesses would need to spend many tens of billions of dollars to switch from producing gasoline-powered cars to producing electric cars, which they currently sell at a loss. Is it even possible for them to market them at competitive prices while still turning a profit? No one even knows, I suppose. It has not yet occurred. Long-term investors that follow Cathie Wood's lead and purchase at the present price will benefit if Tesla keeps increasing production and revenue at their current rates. What is which? $600 worth or $200 before the pre-stock split, or approximately half of the stock was worth a year ago. I think they would be making a wise investment if they did that. Thank you for watching. I'm Jules. Please subscribe, like, and share this video. And speaking of EV dominance, did you know that Lucid Motors is fighting for Tesla for it? Want to know more? Then click and watch the next video here.